Hey everyone, this is Ryan Mallory for SharePunter.com. Today is March 4th, 2013. Like I always do on these live charts, I take about 15 minutes to go over the market in general, what we're seeing so far today, the portfolio, and your stocks as well, and just some trading thoughts in general. Um, the market hasn't really done too much today. Now it looked like it going into the or early morning hours last night. We had the S&P down over 8 points. It looked like it could be just a complete washout of a day for the Bears, and a good one at that. However, you had Uncle Warren come on CNBC and decide to tell everyone that it's a bull market worth buying, and that everybody should start throwing their money into stocks. So that undoubtedly helped the market out some. And honestly, I'm not a huge fan of Buffett. I mean, I respect the fact that he made his billions and billions and billions of dollars over the years, but he's become a more of a polarizing figure, in my opinion, that has motives that I think go beyond the stock market. So when he says buy stocks, I don't think he's really, honestly, in my opinion, I think there's ulterior motives to it, whether it's in regards to Berkshire Hathaway, his desire to see everyone but him pay more in taxes, and among other things. So, I know that's sometimes a unpopular opinion to take against a such a well publicized investing figure that probably one of the best in our lifetimes. But I have a lot of doubt about his sincerity and when he says buy stocks. So, in any case, let's go ahead and take a look at the markets here, what it's doing. S&P 500. We're actually, if you look at this 5-minute chart here over on the middle of my screen here, you can see we're popping a little bit here on the 5-minute chart. We've gone, up a couple of points here. The range isn't that big, so we essentially have a low of 1512 and a high of 1518, so a 6-point range. We're not seeing a lot of movement in the stocks. But like what we consistently start doing, every time we make a new low, we get the dip buyers that come in and prop the market back up. It's like a way of life for the last 3 years, and every once in a while you'll get these brief periods where that doesn't work, but outside of that, everything else does work when it comes to buying the dip. You had the sell-off that took place back in 2011 summer, and there was no dip buying there. You were just seeing traders just getting hammered left and right that tried to do that, but they're like brief blips. They're not extended periods. You had it in 2008, of course, all throughout. So, but overall, though, I mean, since 2008, I would say there's only been like 1 or 2 periods where dip buying didn't work, and right now you're still seeing that. Now I'm still net short on my portfolio. It's not doing bad today. I'd say if you looked at this 30-minute chart, there is a little bit of cause for concern for the Bears, as you have a inverse head and shoulders pattern there right on the 30-minute chart. It's not a clean one, but I think if it gets above 1525, I think there's some major problems for the Bears as a result. I also have a little bit of a line in the sand with 1521. I think if the market gets back above 1521 here, it's my belief that the market will continue to rally from there on. So hit 1521, you're going to confirm this inverse head and shoulders at 1526 more than likely. We're also going back into overbought territory. We're at 69.23 on the short-term stochastics, so that it's not going to take too much of a positive day to push us back over that 80 mark. Let's go ahead and look at some of your stocks here. First one is ACGL. From a long-term perspective, if you're already in the stock, you have a very nice trending position here. Let me need to get my tools out here so I can do some drawing and markups on it. Let's see what it looks like from the 5-day chart, because what it did is it broke out really nicely. We talked about this chart actually a long time ago. It broke out very nicely above the $45 mark, and when you're looking at this weekly chart here, this is what you're following. You're following the action off of the 2009 March lows, and now that we've broken that $45 mark, it's pushed up to 49, so there's a cool 10% profit off of that breakout level. And likely what you're going to see is it probably won't happen all at once, but at some point it's going to drift back down to this trend line. So you want to be careful of that. I would say at a bare minimum, I would have my stop loss at 47.26. That may be a little bit too much in terms of money that you're leaving on the table, so that maybe a more conservative approach would be to put your stop loss, I'd say maybe at 48.08, so that gives you a dollar to work with. And if it doesn't work out for you, you only lose 2.5% or so from where it's currently trading at. Actually, probably less than 2.5, almost just closer to 2% than 2.5. DLTR. You know what, let me go back to ACTL though too, because if you're looking at ACGL from an entry standpoint, I would wait for it to come back to this trend line and test it. Don't wait for the breakout level, because what you have then is a stock that's below this long-term trend line and trying to buy a breakout on a bearish longer-term trend. So don't do that. Wait for it to pull back, and it'll take some time. But if you're able to, I think you'll benefit pretty nicely off of that. DLTR. So here's the thing. If you were able to get in before it broke out here, which I wouldn't have been a fan of doing for my own account. I mean, obviously it would have paid off had I done it, but you know, not knowing that it would have gapped higher like it did, I would have personally have waited till it broke above $42 to get in, 42.03 or so. If you did that and you managed to benefit off of this gap up, what you want to really do now is make sure that this huge gap here doesn't become a target for the bears to try to drive price down into and ultimately fill that gap. So if that happens, you don't want to be victimized by it. So put your stop loss. I'd say you could probably put your stop loss at 44.94. That's going to give you another, $1.10 to work with before you get stopped out. This stock could keep on going, but there is some resistance overhead that you need to be aware of, and I'll draw that for you here. You got a lot of resistance in this area here between where it currently reached its highs around 46.50 all the way going up to 47.89. There's going to be some heavy resistance on this stock. So another approach would probably be to take half the position off now and just tighten up the rest of the stop loss and the rest of the position, and just see how high it'll take you. But definitely some tightening on the stop loss needs to be done either way. Let's go ahead and look at some of our positions currently in the portfolio. TRI, man, I'm really waiting for this thing to just break down. There's a little bit of a long-term pattern here that could bode well from a bullish perspective, but it also represents some heavy resistance, and since we haven't broken above it yet and the short-term pattern looks fairly bearish, that is a reason to stay in this trade from a short perspective. So I'm still short at 29.95. I'm a little bit underwater on it, but not much. I think the action today bodes well. It's having problems with this congestion between $30.50 and $31. So I want to see that continue to play out and ultimately make a move back down into the 29s and possibly even sub 29. And like on this trade and a number of other short positions, I'm not looking to try to make a windfall of money off of these trades. I'm not looking to get 10, 15, 20%. I mean, if it happens, that's great. But my objective is to try to, book an average profit of like 4 to 7% on these trades. If I can do that, I will undoubtedly do very well in my short positions. They will outsize the losses that I take on any of them, and that's always been my benchmark. I find that the longer that you hold a short position, the more exposure you're giving yourself to being either squeezed or having some kind of positive news events push you out of the trade. So those dead cat bounces can be nasty. They can squeeze you. They can cause all sorts of problems in your portfolio. So when you're shorting a stock, try to look for a time frame that works in your favor. That's not going to subject you to a likely squeeze or some kind of news event that pushes you out of the position. So the next position is HOG that I'm short on. I've been fairly patient with this one actually too, and 51.83 was our entry on this one. So we're basically at break even, give or take a few cents. But it's trading in this channel quite nicely. I want to see it come back down into this channel and maybe even test, the lower 49s before we consider jumping out of this stock. LVS, we had some negative news come out on this one, but so far the dip buyers came in full force and has propped that one up some too. But you got a little bit of a head and shoulders pattern here. It's a little bit discombobulated with all the gaps and everything else, but heavy resistance around 52.60s, and I have a stop loss at 53.23. So it's going to take a little bit of work for it to get back above that price range. So if it hits 53.23, I have no problem taking my capital and running, because I don't want to hold it at that point. However, if I'm right on this trade, the possibilities for this thing going all the way down to $46, $45 a share is very real and very possible. My remaining one long in the portfolio right now, and it's done me very well, is Adobe. So it's up 1.2% today, which is phenomenal. Breakout looks beautiful. After this initial pop right here, I was still fairly bearish on the market, so I was really considering whether or not I wanted to sell my position in Adobe. I didn't do that. I continued to hold on, and it's still performing like a champ for me. That's going to do it for today on live charts. If you guys have any questions, feel free to hit me up in the splash zone. Email me at ryan@shareplanner.com, and I'll be glad to get back with you. We got a long week ahead of us, full week of trading. So, button down the hatches and be ready for anything. God bless you all.